I mean, Europe's way over there, and we've always felt kind of isolated in the United States. However, that's kind of a problem. The crisis in Europe is really two crises going on, and they're both debt crises. One is the nations of Europe are spending more than they make. They have a huge amount of debt. And the second problem in Europe is bank solvency. The banks are just basically bankrupt in Europe, although the Europeans would not call it that way. But if they used any kind of decent accounting rules, they would be declared bankrupt today. Now, if one of the big European banks failed in Europe, what would happen is other European banks, because they're so interlinked in their lending to one another, would also fail, like a domino effect.
Exactly.
That would happen. And if that happened, then the U.S. banks, who also own about 10 to 15% of the assets or bonds, or if you want to call it that, are owned of the portfolio of U.S. bonds, about 10 to 15% are European.
So it really, truly is a global kind of economy.
It really is global.
Now, were those European banks being propped up by the attitude of too big to fail by their governments at this point?
Oh, the Europeans definitely are, as ours are. I mean, we are still too big to fail in spite of all the rhetoric. There's nothing stopping a U.S. bank failure today, just like it happened in 2008. The rules are the same.
Exactly.
And the last part of why Americans should worry about what's going on in Europe is a model of what the U.S. is. It's just happening before the U.S. is going. If you look at the riots in Greece, and I don't want to scare people with that, but when things get very bad, people react badly to it. That's going on. And their debt is huge. And that's our problem today, too.
Well, they had, like, in Greece, I think it was 55 years old to retire and get full pensions. They had such unrealistic expectations. But then we have them here, too, when we look at the number of people that are getting Social Security disability and Social Security and Medicaid and Medicare and all these government programs. I don't know how it's going to be sustainable. I really don't.
It clearly isn't. In the U.S., it isn't sustainable. The projections by both presidential candidates is that our debt will continue to increase. I consider that a disaster.
Absolutely. Absolutely. And they're talking about devaluing the dollar further, which is what Bernanke's been doing with the quantitative easing all along. And we're going to be up against the Chinese yen. So that's another whole topic. But what do you think's wrong with the economy in Europe that caused all this?
Well, the key thing is too much debt. That's the trigger to it. It's just too much debt. The worst nations in Europe have been bailed out because they were unable to pay their bonds. That's Greece, Portugal, and Ireland. So they've been given a lot of money by the European Union and European Central Bank. And there's a host of smaller nations lining up for that right now, like Cyprus and Malta and Slovenia. But the big problems are Spain and Italy. If either of those need a bailout, Europe's in deep trouble, and they do need a bailout.
And subsequently, we're going to be in trouble. Folks, again, running a little bit over here. We'll be right back. Please don't go away.
More financial strategies. Let's face it, 401ks are now 201ks, and IRA stands for I'm really angry. Our clients that made 10 to 20% 2 years ago still have it. It's not what you make, it's what you keep. You already trust the insurance industry to protect your home, your car, your life, even your loved ones. Why not rely on them to protect your retirement accounts too? Call Susan now at 520-296-4464. That's 520-296-4464. If Susan is unable to answer the phone or if she's on the other line, please leave your name and number and she'll call you back promptly. That number again for Susan Moorvault is 520-296-4464. If you've missed any portion of today's show or you'd like to hear it again, simply go to www.790knst.com. Click on the On Demand tab and in the drop-down menu, select Podcasts to go to this weekend's show or Safe Money Strategies. You can also always listen to the show streaming live at 790knst.com. Thanks for listening. This is Safe Money Strategies.
More financial strategies.
Wow, we're back for our final segment, folks. It sure does fly by, and it's just a thrill for me to have Tom on our show today. Tom, I want to ask you one more question. Can you give us an example of how a banking crisis becomes a nation's banking crisis?
Yes, Susan, I have one great example for that because there's so many lessons that come out of it, and that's Ireland. Ireland was one of the first ones to go bust. And the problem with Ireland, it had a huge housing boom, similar to what we had in the United States. Then came the bust. The problem is that the Irish banks, there are 5 big Irish banks, went belly up. They lost so much money during the bust that they could not repay their bonds. And the problem is the bonds were owned by a bunch of European banks. So the Irish government was forced by the European Union and European Central Bank to take over the debt of the Irish banks, to bail them out. And therefore, the Irish government, who was doing just fine economically, suddenly became bankrupt themselves because they had this huge bank debt. Then the Irish government needed to be bailed out by the European Union. It was a disaster in the making. The key point here is that the banks, that the European Union was so afraid that a collapse of the Irish banks, because you can ask the question why they just let the banks go bankrupt, they couldn't, because European banks, French banks, German banks, Dutch banks, and UK banks specifically owned a lot of Irish debt. If the Irish banks went down, those banks would go down. They had to save it. The whole European system would have collapsed because of the Irish problem. So they bolstered it up. And this is a great example of solving a debt problem by creating more debt.
That's a great answer. And that's what we're doing right here, right now.
We sure are.
With all of the stimulus money and the QEs, the quantitative easing, the more money that they print, the more it devalues the dollar and the higher the debt is. And using money from one pocket to into another pocket to buy bonds, I don't understand how they get away with it. If we did the things that the government did, we'd be convicted of felonies.
Susan, are you aware that today the biggest purchaser of new U.S. Treasury bonds is the Federal Reserve, not someone else?
It's amazing.
So this is money printing.
How does that work? To me, it's so hard to understand. It's like they take money out of thin air. Literally, they loan it into existence. And they devalue our dollars. And people need to understand, folks, this is critical. We're getting close to an election here. And you need to get, as I say, get educated on your options so you can make informed decisions, because the decisions we make now are going to affect us and our children and our grandchildren. And it's so important to try to understand this. I really encourage you to go to economyguy.com and sign up for Tom's newsletter. For those of you that are out there at Raytheon now, he's one of yours, so keep him in mind. And he's one of mine. You're a client of mine too, right, Tom?
I sure am.
Yeah. What did you think of our process with doing your planning?
It was so friendly. It was so easy. And as an engineer, I want to have all the details, of course. and I got them all, and I understood them. And therefore, the decision was easy for me.
That's great. Well, it's a privilege to serve you and Christine. It really is. I just want to end with a few points, folks. If you have CDs that are sitting around not doing well, if they are doing well, I'd like to know where you have them. We have some short-term annuities. We have one that's 5 years. It's paying 2.75%. Now, it's just a 5-year commitment, but you'll end up having a lot more, and it's growing tax deferred. Remember, if you have money sitting in a CD account, you're going to get a 1099 at the end of the year on your measly little gain, and you're going to have to pay tax on that. With a 3% inflation rate, what direction does that leave your money going? With at least the 2.75, you've got tax deferred growth, so you're earning money on your principal, you're earning money on your interest, and you're earning money on the money that would have been paid for taxes. I also have a product that will give you a sit. Now, this is a good one for you Raytheon guys that have legacy plans where you do a 5-year payout. We can give you a 6% bonus on your distributions every month for 5 years. So you take that 5-year payout, you add 6% onto that, compounding that for 5 years. At the end of 5 years, you have a nice chunk of change, and it's something that you can convert into a lifetime income. So those are just a couple of things that you can think about. Please go to my website at morefs.com. There's so much information there. On the bottom of the homepage are a couple of videos from 60 Minutes where Tom Croft did an investigation of 401ks. You need to know what you're paying, what those hidden fees are inside your 401ks. In fact, by the end of this month, the government has required all of these big investment companies like Fidelity and others to disclose to the actual fees that you're paying. So be looking for that statement. They'll probably try to underplay it as much as possible, but you really need to be aware of those numbers because they affect you. If you're 59 and a half or older, you can roll that money out and still stay in your job and roll it over into a self-directed IRA with me. And let me show you a product that would give you a 6 or 10 or 12% bonus. In many cases with Raytheon employees, you're able to roll out your money even before 59 and a half to another qualified plan. So if you'd like to come in and see me, there is no charge for my time and we'll have a great conversation. I just promise you when you leave, you'll know more than when you came in. I promise you that. Tom, thank you for being here.
Thank you, Susan.
Until next week, as always, stay healthy, stay happy, have a wonderful weekend, and God bless you.
You've been listening to Safe Money Strategies with Susan Moore-Vault, president of Moore Financial Strategies. To learn more about today's program or to talk with Susan, call 520-296-4464. That's 520-296-4464. And make sure to tune in again next week at this same time for Safe Money Strategies.
Protecting all you have.